This is a video about bounce back loans, an update on bounce back loans, in particular looking at what happens if you can't pay it back, but also having a quick look at what if you've got the money cash and just waiting there to net off against the loan. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please press the subscribe button, and if you like the video, it helps me and the channel. So bounce back loans, an awful lot of people took bounce back loans out during COVID, and now they are beginning to being repaid, and some people can easily repay them, some people are struggling. So let's have a look at the people who've got lots of money to start with, because they're the easiest to get out of the way. Quite a lot of people took the bounce back loan out just in case, because the money was available and we just didn't know what was happening at the time. So they took the money out, but they have an equal and opposite amount, or more than equal opposite amount, sitting in a deposit account, effectively earning very little interest, because that's the way of the world. For those people, just don't forget that you still can pay off the bounce back loan. So if you're unlikely to need this credit, then you might just want to pay off the loan and save yourself some interest. You know, on a £50,000 loan, the interest is what, £1,000 a year, something like that. So it's just a little saving that will help, and it could also help because there's like an £85,000 limit on the government insurance on bank accounts. So if you use your money on deposit to pay off the bounce back loan, it just helps net all that down. It might be helpful, it might be important, but I really hope it isn't. So now a more difficult thing if you can't repay it. It's always been the case that for companies, that directors are not supposed to take out more loans if they can't pay back the existing loans. But there was sort of all a horse and cart went through that, because the whole point of the bounce back loans was that it was sort of expected that you would be in difficulty, and therefore it was expected that you were taking on loans when you couldn't maybe make ends meet. So it does actually, it's a peculiar thing, because it goes against what we'd normally do through the Companies Act. But there we go, that's what they did. So if you can't pay back your bounce back loan, then let's just think about what's happening. Well, first of all, let's just be sure that if you did take the loan out incorrectly, so if you didn't tell the truth on the forms and you took out more than you should have done, then by my reckoning, I mean, I'm not a legal expert, but by my reckoning, if you lied on the form and you received money, that sounds very much like fraud. So I would be really careful about that, and try to make amends as soon as you can. Really hope it is a small number of people. What worries me more is if you just can't pay back the loan, you took it out all correctly, but you just can't pay it back. But there are really two situations, and perhaps a mixture of the two. So first of all, if you can't pay it back, it could be just because the company lost money. The company ends up, it's lost the money, it's paid it to suppliers, it hasn't got the money in from its customers, so it's bust. And in those circumstances, that is how a company is bankrupt. You just need to be aware that if you do let the company go bankrupt, I would always advise you to speak to an insolvency practitioner. But you might also want to consider that it always affects, if your company that you're a director of goes bust, it does affect your credit rating as a director, your personal credit rating. So you should be aware of that. So that's situation one, the company just lost the money. But I think in quite a lot of cases, because there was very little COVID support for directors of owner-managed companies, then quite a lot of that bounce back loan filtered through one way or another to keep the personal finance of the directors going when they didn't have any income from the company at all, or very, very, very little. And I think that was quite reasonably common. But just let's think about what's happening there in terms of the double entry, because I always like to talk about double entry bookkeeping. What you have is a loan to the bank for the bounce back loan, but because the directors had taken it out, but they couldn't pay dividends because the company didn't have retained profits, what they'll have is a director will owe the company money, or it's an overdrawn director's loan account. So if you let the company go bust in that circumstance, the insolvency practitioner will come in, they'll say, oh, there's a creditor for the bounce back loan, but there's a debtor, which is money owed by the director. And then the poor old director, he's got to pay back the money because he owes it. The company's gone bust, so he gets a hit on his credit rating, and it also looks like a bit of wrongdoing because he's taken money out that really wasn't his to take out. So I think it's not really a very good situation for the director. So I would definitely take advice in that circumstance, and you need to really think about it. And of course, the third scenario is a mixture of the two, which I think is probably the most common, which is the company's lost money and some of the money, some of the bounce back loan also being used to subsidise the income of the directors as the business itself has lost money. But in that circumstance, you've got to really think hard, because the director does owe the money, so maybe you should pay that back. But how is the obvious question. But then also the company's gone that the actual underlying trading is not okay. And I really would like to, if anybody's in those circumstances, please talk to us. What can they do? What do they do if you've done stuff that's wrong or they perceive to be wrong? As I say, one of the bad things is that you kind of get a hit to your credit rating. But I think the other thing is that if they really do think you've done wrong, they can disqualify you as director. And that's not uncommon. And the problem with that, of course, is you can't be a director, and if you're running companies, that's what you do, then suddenly you can't do what you do, and you would be forced into getting a conventional job. And if you've probably been out of the job market for quite a long time, so that'd be quite a tough call. So they may well, and I would expect them to disqualify people as directors, and that is something you really want to avoid. Which is why, if you're running into trouble with your company and you won't be able to pay back your bounce back loan, I think there is a bit of a person down the pub sort of thing where they're saying you're not, don't worry about it, don't worry about it. I think you should worry about it. And my advice would be to seek advice. So I hope that's not too scary. I think most bounce back loans, of course, are every month they're just being paid back and there's no problem at all. For some people, they've just got the money on deposit, so they may want to think about whether they actually need the bounce back loan. And for others, if they are in a bit of trouble, then I would advise you to seek further advice. You know where we are if we're one of your advisors. If not, I would suggest that you speak to your own advisors. I hope that helps. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel. And if you press the like button, it helps me in the channel. Thank you very much.